And so when we decided to raise a fund, everyone thought we were crazy. The institutions were definitely not investing, and I knew that because I'd worked at one of these institutions. And so, it took us 22 months to raise our first fund. We did have about 530 meetings. We ended up getting 97 limited partners. And that was for a $29 million Aussie fund. And, that fund ended up being a big investor and sort of earliest investor in Canva and SafetyCulture and Culture Amp and Propeller and a bunch of others. We decided to show our gender split through our funnel. We think it's the right thing to do. We're very happy to do it. So we went through a little moment of sort of, wondering whether this was all worth it. But I think in the end, we're...
If you haven't heard of Rick Baker, you probably should. As co-founder of Blackbird Ventures and the earliest backer of Canva, Rick has quietly shaped Australia and New Zealand into fast-growing startup hubs. From grinding through 530 meetings to raise a small 18 million debut fund to now managing billions. His journey is a masterclass in conviction, storytelling, and long-game venture capital. In this conversation, Rick pulls back the curtain on the kiteboarding trip, where he first met Melanie Perkins and heard the Canva dream, why Blackbird engineered early liquidity and how he did it to protect Fund 1, how he thinks about AI, diversity, and building a multi-generational VC franchise beyond Silicon Valley. If you want the inside track on how billion-dollar outcomes are really built, this one's for you. We were together not long ago in your beautiful home in Sydney, speaking about your progress in deploying your pledge in investing more in women-led innovation. And of course, we're coming together to celebrate over $1 billion deployed now by the partner funds at Beyond the Billion.
Congratulations.
Couldn't have done it without the support of great funds like you. And it means a lot to have a multi-billion fund like yourself supporting us all the way from Australia, showing that this is, of course, an important issue globally. Tell us a little bit about the story of Rick Baker and how we have come to know him as the biggest backer of Canva and all these great success stories that you have today.
Here in Australia, I'd like to sort of humbly say our startup ecosystem is growing really beautifully, and it's been really kind of a decade and a bit of since a bit of a restart of the ecosystem here. My background, grew up in Sydney in Australia. I've started 2 software companies for my sins. Certainly learned what it's like to start right at the beginning and be part of those founding teams that literally turn sort of something, from nothing. And then I managed to get into investing. I found myself at one of the superannuation funds in Australia, where that's our pension system here. It's a wonderful system in Australia. There is about $4 trillion Aussie, so that's kind of $3-ish trillion US of capital in our pension system here. And it's been a wonderful source of capital for the venture ecosystem, over the years. So I found myself at one of these pension funds and running their venture program, and spent a lot of time in Silicon Valley. Came and lived in Palo Alto with my 2 little kids at that stage. And we managed to invest with some just fabulous funds like Sequoia and Accel and Benchmark and Andreessen and Kleiner. And I kind of learnt how they invest. My job was to study how they invest. And they're such different firms, as I'm sure everyone will know. And then I caught the bug of investing and venture investing, and came back to Australia. And what I saw here was something really fascinating happening. We had a whole bunch of startups here in Australia, led by Atlassian, and I'm sure a lot of people would know Atlassian. It's been a wonderful success, a lighthouse here. But there are about a dozen great startups in Australia about 10 years ago. Companies like Aconex and Envato and Campaign Monitor, the list goes on. There was not an Aussie VC in any of them. And what had happened is a few of the later stage US firms had come over and picked cream of the crop. And I'd say Accel probably did the best there, investing in Atlassian and a bunch of others. I was fortunate to meet my co-founder, Nikki Shivak, around that time. And we thought, wow, there's a real opportunity here with very little capital in the market, but great companies starting to start a new venture firm and to do it sort of the way it's done in Silicon Valley here in Australia. So that was 13 years ago, and here we are today.
And here we are, Rick. So I want to take a pause there because I think it's important to also frame for the audience, in terms of this growing ecosystem in Australia. In the US, we kind of know, we're at the 100 billion mark in terms of capital deployed and it's increasing. This is a bit of a tough market. What kind of numbers are we looking at in Australia here and what are we expecting in terms of growth?
So there's a few $1 billion invested every year. That's grown from a very low base of, a few $100,000 probably 15 years ago. But we now have a really vibrant ecosystem. So, at Blackbird, we logged about 2,000 companies, startups that we saw last year that were sort of, good enough to actually go in the system and, be logged and scrutinized. So the ecosystem's really growing nicely.
You were a founder twice, and this was in a time where it was not, like today, I almost think the smartest in college, right, will think about going into a good startup as a career path. But back then, it wasn't actually the natural thing to do. And yet you decided to actually build software in real estate.
Well, I partly blame my cousin who was a co-founder and sort of convinced me that this was a wonderful thing to do. But, I was working in a little investment bank over in London and enjoying that. But it was 2000, right? And the dot-com boom was raging and, had this sort of urge to try and do something. Yeah, so my cousin and a few others and I, set up this business with software for real estate agents. And it was really back when browsers were quite difficult to actually build applications in. Everything was quite static, and we used some of the very early versions of JavaScript and XML to try and build this SaaS product for real estate agents inside the browser. And that was a big thing because you have real estate agents were sort of spread out all over the place with all these little servers that were trying to sync and these green screen applications, and we brought something in the browser that was quite easy to deploy. So that was the start of that first business.
And now you're on to your next big business of managing a multi-billion fund. If there was one thing that is a leadership lesson that carries through from when you were building your software company, what would that be?
I think all the way through all of them, it's being able to be articulate and tell stories, articulate your mission, being very clear on what your mission is. And we see this too in startups and great founders that we see. One of the things we're looking for most is, what is that mission? Let's get to the bottom of it and let's see how that founder kind of describes it. Can you bring out that passion and the insights that this person might have for that? And I think storytelling is just, it's so important throughout life.
Yeah. So let's go back to then building Blackbird. You and Nikki meet at StartMeet through Gravel, I believe, and decide that this was something you want to double down on. And yet you often mention it was at a time where the taps were switched off for Australian VC. Bring us back to that moment and those, I believe, 530 meetings that you had.
Yep. So Nikki and I decided to do a fund. We met each other, and the serendipitous thing is that we didn't know each other that well when we sort of set out to start Blackbird. We kind of knew that we wanted the same thing. This was something that was really contrarian here in Australia. It had been tried before and unfortunately hadn't quite delivered the returns. And so when we decided to raise a fund, everyone thought we were crazy. The institutions were definitely not investing, and I knew that because I'd worked at one of these institutions. And so, it took us 22 months to raise our first fund. We did have about 530 meetings. We ended up getting 97 limited partners. And that was for a $29 million Aussie fund. So what's that, about a sort of 18 or 19 $1 million US fund. So it was a little fund with lots of investors. It was actually quite cool because we went out and our target was really two types of people. It was anyone who had done well or made money in tech in Australia. We basically scoured the universe and we just go and have coffees with people. And our motto was that we were never going to convince anyone. We just had to uncover the people who already believed that Australia could produce great startups. And they would be the sort of people who would give us money. And then the other half were sort of PE managers and partners here in Australia and who I knew pretty well from my past. And they obviously had that kind of, hey, come on, let's go, we'll give you a go. One of them, I remember one of my first was one of the leaders of private equity here in Australia. And I went up for a meeting with him and he was, likes to ask the forthright questions. And I was thinking, this is going nowhere. And he said, I'll give you $1 million. We'll see what you can do. And so that was a great start. But that first fund has been this most amazing fund. And, as often happens in the funds that are hardest to raise are those that are invested in those times that are really special. And, that fund ended up being a big investor and sort of earliest investor in Canva and SafetyCulture and Culture Amp and Propeller and a bunch of others, and turned into this awesome little fund.
22 months is a long time in the desert, right? I've been told by some of our fund managers, it feels like you're in a raft in the middle of the ocean with wind blowing left and right. You don't really know that you're going to make it. 530 meetings takes a lot of mental resilience there. How did you and Nikki come to a point that this was going to work out? Did you ever feel like, this is rubbish?
No, I think we're both sort of, diehard optimists. We were very passionate about this, and I think it happened kind of bit by bit. It was just these little hits of dopamine, I guess, when someone would say yes, even like 100K or 50K, or we had a whole load of 100K checks, and then the odd $1 million check, and not many bigger than that. So I think it came in little dopamine sort of hits along the way that sort of kept us going. We had a first close halfway through that on about $12 million or something, and that allowed us to do some of the first investments. And in fact, Canva was my first investment. It was the fund's second investment.
What an investment. Let's talk a little bit about that. I mean, you are still to date, I believe, the biggest shareholder, something like 14%. What was the first meeting with Melanie like? And, what gave you the conviction? What was your and Nikki's thesis to begin with Blackbird?
I met Mel and Cliff when I was on a kiteboarding trip in Perth. And kiteboarding trip set up by Bill Tai, who ran a just amazing organisation called Mai Tai. And I got lucky enough to sort of get caught up in that and learn to kiteboard. And Bill invited me to this little conference in Western Australia in Perth. Not much tech happening in Perth at that time. There's actually a really good ecosystem building up there at the moment. So we went kiteboarding, we went to this little conference. And one night, it was someone's birthday, and we were having a birthday dinner, and somehow Bill had met Mel and Cliff, and he invited them to come along to the birthday dinner. And I have a Facebook post that has the two of them on that photo, and it was the very first time. But actually the moment that was, I think, most telling was the rest of them all went out on the water, out on the Swan River. Mel and I decided we didn't want to go out in the water, and we just sat on a park bench by the river and started talking. And it was the first time I really sort of met and spoke with Mel. And I was still working at the pension fund at that stage. Mel and Cliff were doing Fusion Books, which was a school yearbook business, which was actually doing really well. And Mel pitched to me the dream of taking that and building Canva, a generalized graphic design platform, and frustration with the current state of graphic design tools and the way that you did graphic design, and her passion for allowing ordinary people to do great design. And I, at the same time, shared my passion for wanting to start a venture capital fund. And as I look back, and Mel and I have reminisced about this quite a lot, it's a kind of pretty heartwarming thing to think that we both managed to kind of grow these dreams kind of, in parallel and sort of have intertwined journeys. So it's been a wonderful journey.
And what was the thesis then with Blackbird? It was everything from Canva, I believe Zoox, Propeller was in there as well. So pretty broad. What were you looking for with, an 18 million fund? That's not a lot to go around as well. So something like 20 companies, small checks, right?
We had this pretty strong thesis, which still applies today, that there would be these great global companies built from Australia. And we'd seen it from, as I said, that dozen or so companies that had done well. So it was very much, we want the best in the world, not just the best in Australia. So we weren't doing kind of quick follower models into our economy. We wanted best in the world. And then very much looking at this sort of global right from the beginning. And, back then, and in fact, Atlassian were pioneers of this, before this product-led growth term had been coined, and we called it bottom-up growth. And what we loved was just this idea that from anywhere in the world, and Australia in particular, you could use digital marketing channels that were just starting to broaden and get well known at that stage to attack global markets right from the beginning, and do it with not too much capital and without having to go and set up sales teams all over the world. So those were the sort of key characteristics which naturally lent us towards kind of internet SaaS types of businesses. And, I think SaaS was the core theme back in that first fund. But we were always curious. We were looking for great Aussie founders wherever they were. And Zoox was our first deep tech investment. Principal founder, an Aussie, Tim Kentley-Clay. We got really fascinated with Zoox and ended up leading that seed round as well. So that sort of was our entree into some deep tech stuff. And now we do about 80% sort of software, internet, SaaS, and 20% deep tech stuff.
So let's go tactical a little bit. I mean, there's always a debate with investors, right? Is it really luck? And my summer reading is always revising the psychology of money. And one of the big debates is this luck or is this a real picking skill? Are you really able to look at your patterns of success here? And I want to go back to Canva. Of course, it was serendipity. You put yourself in that position. But was there a formula that you were evaluating to sort of take a bet on Mel early on?
So I don't know. I have various theories on this, and I'll probably be wrong, whatever I say. But I think you do make your own luck, and a lot of life and success is putting yourself in the right position, such that you get the opportunity to pick the luck. And then I think pattern matching and having a strong thesis and mission, which is hopefully the right mission, and is hopefully a little contrarian, even better. And building pattern matching skills around that helps you kind of pick those lucky moments. And I guess we managed to do that a few times. I think that's kind of what venture capital is all about, right? It's getting a better than average chance of finding and then selecting some great opportunities.
So Fund 1 was one of your rock stars. I think at a point, I want to say, was it 2019, 2020, where you were contemplating sort of building some liquidity to the fund. You were sitting on something like, was it 13x or more?
Yeah, that's been a really good fund. We got sort of 6-ish years into the fund and hadn't really had much liquidity, but the fund was sitting on 13 times. And so, yeah, we decided it was the right time to take some money off the table. We sort of wanted to make it so there could never be a bad fund. And so we ended up selling a slice of the portfolio, kind of GP-led secondary process, and returning about 3.5 times the fund. And then we thought, great, this can never be a bad fund. And then we obviously had most of the fund still in the ground to run. And so the fund now is sitting on just about 40 times TVPI, and we've managed to give back about 12 times DPI. So it's a cracking fund. It's coming to the end of its life. A little embarrassingly, it's called the 2012 fund, but we didn't actually get it closed to 2013. So it's a 13 vintage, and it being 2025, we're sort of starting to wrap up everything, sell down everything. We've got a big chunk of Canva in it, which we will hold through to the IPO, which
sounds like a good idea. Sounds like a good idea. So a decade in, this makes me think about some data I saw actually today from Carta with regard to sort of the time frame, the holding period, and the expected life cycle per se of funds, right? There's always a perception that within 10 years, this is a 10-year fund, right? You need a return, all that. And yet companies are staying private for longer. What are your thoughts on where the outlook will be? I mean, Sequoia has now included an evergreen structure. Is this something Blackbird might think about?
We've definitely thought about it. I don't think we quite yet have the market power of Sequoia to kind of rock the boat and create a new structure. But it's an interesting debate because I think that 10-year time frame was set up in decades past when companies did go public or otherwise created liquidity much faster. And, most of the companies in that 2013 vintage fund are still on their journey in the private markets. And if you had a longer time frame, would happily hold them for longer, but we are having to create liquidity largely through secondary sales, which is actually proving to be a really nice way of creating liquidity without disturbing the life cycle of the company. Yeah, ideally you would have longer funds now, but I think the LP world is sort of still set on their mindset in these 10-year funds. And so we're sort of stuck in this little limbo where we do a 10-year fund, they all get extended. The average life of a fund I know is, before it gets wound up, is something like 15 or 17 years. So we've got to be a bit realistic about this at some point. We have invested in about 160 companies, and about 130 of them are still up and running and in the portfolio. We're currently investing out of our fifth fund, which is a $1 billion Aussie fund, and raising a new fund at the moment to continue the journey.
You started small, right? And you've really built a behemoth over the last decade here. Did you build intentionally a multi-generational fund, and how do you think about the franchise here?
When Nikki and I first started, I think it was we were thinking cottage industry and we'll raise a small fund, and if we ever have a $100 million fund, that would be amazing. I think just in the same way as founders' ambition grows as their business has success, I think we had that same thing happen to us. And we realised a few years in, firstly we started being able to raise larger funds, and most importantly started to see the deal flow and the great companies come through the ecosystem. And I should say, we started in Australia and we added New Zealand to our focus regions a few years ago, and that's also been a great source of deal flow and founders there. Your ambition gets pulled by the success and the growth of the ecosystem, and so that's one thing. And then I think at some point we sort of looked at each other and said, this is something that we want to be more than just us two. Our first two partners, Sam and Nick, joined us in our 2018 fund. You get a lot of pleasure and fulfillment of seeing other people sort of come on the journey with you and join and sort of come up through the ranks. And we started seeing that more and more, and made this decision to make, we want Blackbird to be much more than us and be generational. And so we're now a team of 65 with 29 investors, 7 partners, and really want to be growing sort of the next group of partners that at some point, and it's not in the very near future, and obviously we'll be handing over more and more to those partners, and Blackbird will continue on, we hope.
And what are the characteristics of a good investor now that you're, I guess now the veteran, some would say? Of course, you're still in the game here, but you are training the next generation. You look to as a mentor to so many, including Sam, building in New Zealand there. What do you think the next generation needs to know about investing?
Oh, it's a great question. I don't know if I have a really great answer, but I think it is, it's been said a lot, it's a cliche, it's an apprenticeship model, and I really think it is. I think this sort of pattern matching that you get from just seeing lots and lots of companies, both pitching and then actually the journeys of the companies, is really important. And I think so it takes time. We put a lot of effort into our hiring. We do use a blind hiring process. We use an application called Applied, which instead of looking at CVs, we set up a very carefully worded set of questions. We ask people to answer them, and then we mark those questions individually without seeing anything about the people. And only once we've marked them do we start opening up and seeing details of, about who these people are. And we think that's a really good way of cutting out bias. Of course, then we go into the detailed interview process, and we're very much about, setting tasks for people to do. Interestingly, the emergence of LLMs has made that interesting, and how do you test that, whether it's an LLM answering the question or a human is something we're grappling with at the moment. And then it's about really just getting people into the team and growing them and working with them, and not everyone will work out, but knowing that, hopefully we'll have a few that rise right up to the top, and certainly that's happening here at the moment.
So it sounds like quite a black box on your hiring here. But what is one of the most important questions you think needs to be answered? In
investors, we're looking for people who are obsessed with startups, because I think that's really, really important, and who also really interested in investing. And so to do those two things, obviously we're asking questions around the startup ecosystem and what they've done, and we're really looking for people who have been embedded in the ecosystem. And then we often ask quite contrarian investment questions. We'll give someone an S1 and of a company that maybe I can remember we did one where WeWork was not going so well, and we asked people to give us the positive story on that. We like to sort of pick investment, kind of fairly well-known investment themes, and get people to give their views on it.
VC has become a popular career path, and yet, some folks tell me, as I love to hear whether you have a contrarian opinion, you're either a good investor or you're not. You can't really learn these things. It's a gut feeling. It's hard to really quantify. Do you agree with that?
Partially. I think there is definitely a something there, but I think you do learn a lot of it. And I think pattern matching is something like, I sometimes call it gut feel, and people don't like it when you say you invest using gut feel, but really pattern matching is just gut feel, right? It's like the human version of an LLM and training the LLM, right? So I do think learning is very important. I think you can learn a lot of it. Maybe there's some talent there that needs to be at the beginning, but I think a lot of it's learned.
Yeah, so we talked about Canva as one of course, the most meaningful outcomes for you, also in terms from a fulfilling journey wise personally. What else are the most sort of exciting outcomes from your companies that you've been really, really thrilled by?
Yeah, I mean, there's been a bunch that we've been fortunate to invest in. SafetyCulture is one of them, does workplace health and safety management. Culture, as I come through the mix, we have a company called Eucalyptus, which is in healthcare and delivering healthcare to people using telehealth, which has had obviously a huge boom by all the weight loss drugs recently. On the deep tech side, we have a rocket company in Australia called Gilmore Space. It's Australia's version of SpaceX or Rocket Lab, which we are hoping in the next few weeks we will get our first orbital launch attempt, which is really exciting. And there's a lot happening in AI in Australia and New Zealand, which is both an excitement and a relief to us, because whenever a big new theme comes through, we kind of take a deep breath and really, have to look and see how our ecosystem is going to play in that theme. And I'd say with AI, it's been sort of embraced fully here, which is, it's great.
And how are you thinking about that in Australia? Is it more the picks and shovels approach of the application layer? What are you seeing on the ground there?
Yeah, so definitely by volume application layer. And I think that's really interesting in that we're starting to see some new breeds of founders coming through. We used to be was very much focused on kind of technical founders or having technical founders. And I think now the expertise around industries and workflows and how to apply AI to those is something that's really, really important. And as we're seeing, building the actual code is becoming easier and easier and faster. And so we're seeing lots of founders who are much more kind of domain specialist founders coming through. And I think one of the sort of good things there is that, we were worried at first that AI was going to be sort of dominated by young men. I think because of this domain expertise coming through, a whole lot of great women founders stepping into the ecosystem as well. And, I think that's really great.
Yeah, that's great to hear. And are you seeing the kinds of, VCs here are sort of really scrambling to find the next winners. We're seeing companies like Lovable, I'm sure you've seen them, hitting 100 million ARR in a short amount of time. Are you seeing that kind of excitement and actual build in Australia itself and New Zealand?
Absolutely. Yeah, we're seeing super fast growth, faster than anything we've ever seen before. Canva is our standout growth with a graph, and we've now got a bunch of companies that have grown faster than Canva, and that's definitely that AI phenomenon kicking in.
And how are you advising your other founders in this era here? I'm just thinking about your portfolio. You also have alternative proteins, right? So very different angles, really. How are you advising some of your top founders to rethink how they're building, if at all?
On the software side, it really is, a full focus as it is anywhere on AI and building that into the whole way that everyone works inside an organization. On the more deep tech side, it's much earlier in being built into how they're using AI. Obviously, they're using it on the software side. I think that's something that we'll see in the future is sort of AI applied much more to the physical world. And we're just starting to see a few founders really sort of think hard about that and tackle that.
What's the most, surprising application that you've seen recently that Blackbird's excited by?
One of the interesting things we're looking at now is hyperspectral vision. We see in red, green, blue a very limited spectrum, and most AI vision so far has just been around that human vision. But machines can see a much wider hyperspectral vision. You can gather much more information from the things that are giving off the light. I can be in so many different things. Health, definitely. These hyperspectral cameras can see a lot about what's happening inside the human body, but also classification, material detection, basically anything that really needs to know what something is or how it is operating can be enhanced using this.
Yeah, super. So have you changed your thesis at all? From a 30 million Aussie fund to now $1 billion, I'm presuming it's now multi-stage, you're covering the gamut. How have you rethought how you're investing?
So one thing that has not changed is that we go as early as absolutely possible. We just love the very first pre-seed, pre-product, pre-revenue round, and we'll invest 250K in something that's pre-product if that's all the founder wants or needs at that stage. That's what we did in Canva. Our first round was 250K into pre-product Canva. And so we're still doing that, and we invested in about 45 companies in the current fund so far that we're just finishing off. 94% of them we invested sort of seed, pre-seed. So even as the funds got bigger, we've just continued to go early. We think that's super important. We think that's the moment where you start building a great relationship with the founder. We have done a lot to build up our brand over time, but we're never really able to outcompete the big brands in Silicon Valley on brand and name alone. But if you've built this relationship with the founder from the very beginning, you were the first person to back them, and then you've backed them repeatedly, you then have a reason for still being able to invest in those later mid to late rounds when everyone knows this is a great company and there's a lot of competition to get into that company. And that strategy has served us really well over the years. And it's one of the reasons why we were able to build that big stake in Canva was.
Have you changed your mind on portfolio construction at all? Do you keep, something like 50% for follow-on, or how do you think about that?
Again, it's been very similar through time. We've had this saying we keep about 50% for follow-on. And we then have a follow-on fund as well. So our core fund keeps about 50% for follow-on. We have a follow-on, or it's not. I like to call it follow-on rather than growth fund because it's still, because our core fund's so small, it's still investing in some kind of late Series A's, early Series B through to some later stage. So we now have the ability to keep investing with that second fund.
Yeah, and just to get a sense here, in Australia, is a seed round something like $1 million today, Aussie dollars?
Maybe 2 or 3 Aussie, so
okay,
1 or 2 US.
Yeah, and then Series A would be?
There's this interesting phenomenon of what often gets done is what we call an Aussie Series A, and that's kind of 5 mil, maybe a bit more Aussie. Then what happens is that the best companies tend to head over to the US and sort of get the attention of the big firms in the US. And what they're trying to raise then is kind of 7 to 10 million US, which is kind of a US Series A. And everyone wants to call it a Series A, so we just do a second Series A.
Gotcha. That's good intel here. All right. So you talked a little bit about pattern matching. I'm not going to give you, only softball questions here, Rick. You know me. Pattern matching. We talked about bias. I know you're passionate about this. Kate has been working with us very closely to work through the gender lens strategy within Blackbird as well. And yet, one of your pattern matches was the likes of Kiki that really broke the internet at some point. Talk to us a little bit about that and the learning there in terms of your investing.
Yeah, so there's this early stage where you look at the founder, the passion, the mission, and sort of what they've done. And with Kiki, that all came together, and we had a really young, passionate founder who had found this model of doing a new form of subletting, what could potentially be an Airbnb 2.0, and the desire to take the sort of small successes that it had in Australia and New Zealand and take that to the US. And that's really what we backed them to do. I think, the hoo-ha was around one of the marketing efforts here was to start what was, a club for young women in New York who were, moving to New York and wanted to discover and live in New York. And unfortunately, that was described and marketed in a way that was perhaps not as emotionally intelligent as it could have been. It was a really tough moment for us. We had to live through that. As a backer of founders, we back founders, and it's not our job to, despite what certain people in the media would like us to do, to come out and start criticizing and be negative about founders. And so, really what we did was sit down and work through this challenge with the founder, and in the end, got to the point where he did apologize for the way that he articulated that strategy, and I think it was the right outcome. It was something that was regrettable, but it's something that that sometimes happens in these situations. We're not experts at how to deal with media. We're certainly better at it now.
The question that often comes about in situations like this is, what is the role of investors in your opinion? Are investors expected to, be that activist board member to ensure that every path taken is a certain way? Where do you stop at the freedom of the founder to really build an experiment and make their own mistakes here, to build in the way that you believed in?
So I think, there's always going to be mistakes made at the startup stage, and we can't shirk away from the fact that there will be mistakes made. I think our responsibility is to be a positive force, and a positive influence on the founders as much as we can. And you learn, could we have acted faster and quicker? Probably. But, I think we got an outcome that was, reasonable in the end. You live and you learn.
Going back to gender lens investing and thinking about your portfolio, of course, one of the early conversations that made me think was the fact that your transparency also brought about backlash from the media. The Australian media is pretty brutal, I would say.
Yeah, that can be pretty brutal sometimes.
Yeah. What are your thoughts here on that? The scale investors, Carol, of course, is pushing for everyone to be transparent. Is this a good thing? What should we be encouraging here? And what has your gender lens investing journey taught you?
We are not a fund that kind of is, has a gender strategy or mission. We're a generalist VC fund. But I think we care a lot about having funds that are balanced, and we care a lot about making sure that we are attracting all the best founders to come and see us and talk to us, and that we are, selecting them in a way that is as unbiased as we can make it, and understanding that, we're never going to be perfect. And I think we're influenced by the fact that by far our best investment, your Canva, is led by, a wonderful woman, Melanie. So for us, kind of this idea that having balanced funds and making sure we don't leave out a whole part of the founder community, it sort of slaps us in the face every day. Like, it's not theoretical for us that there are great women founders out there and we need to make sure we're including them in our process. It's there in our face every day that this is our very best investment. We're influenced by that and by the fact that it's just the right thing to do. We obviously, joined the organisation and made the pledge a few years ago. At the same time, we were already starting to look at getting our data out. We're quite believers in being transparent, and in we think that if you do put data out, it makes you accountable and makes you actually do things towards making that better. So, for example, we put our returns out on the website and go and see them. And, what we decided to show our gender split through our funnel. There's a great organisation out here that is helping us sort of try and get standardised across the industry and how we do that. And so we made the decision to do that. And we think it's the right thing to do. We're very happy to do it. Of course, then the interesting thing is you then get slammed by the media when you don't hit your targets or it doesn't look as good as people would like it to look. And that's an interesting moment, because then you think, gee, should I have done this? Like, if by trying to be better, we're the ones being criticised, where everyone else who doesn't say anything and just keeps their head down doesn't get criticised. So we went through a little moment of sort of, wondering whether this was all worth it. But I think in the end, we kind of gotten through that and we've toughened ourselves up a little bit. We'll live with the criticism that we don't hit targets. And, we're not hitting the targets. Let's face it, it's hard. It's a hard problem to get a balanced portfolio through a gender lens and other diversity lenses as well. It's really hard, but it doesn't mean you shouldn't just keep working on it, and we'll just keep working on it.
We salute you for doing that, and I think we believe it continues to be important because you're setting the standard for others, right? And criticism is just part of the game, I guess, part of the process, just like your 530 meetings is all part of the game.
Yep.
What have you learned here that has worked? I know it's still hard. Are you seeing enough in the top of the funnel? Are they dropping off? Like, what is the issue in Australia specifically here?
We've set ourselves a target of 40% of companies that make it to our investment committee pitch have a woman in the founding team. That's our target. We've hit it every now and again, but we don't hit it consistently. I'll say that right now. I would say there are a number of things we're doing to try and improve it. I'd say firstly, we're working internally on getting our own investment team to be balanced, and we're not there yet at the senior levels. We're doing pretty well at the overall team level. Our GPs, there are 7 of us and 2 are women, so we've got a way to go there, and we're working on that. That will take us time. I do think it's important to have a balanced investing team. It makes sense that the best founders sort of want to see representations of themselves sort of in the team that they're about to go take investment from. Next, we're thinking a lot about sourcing, and that's about both making sure that all our messaging, whether it's sort of website, the way we speak about things, the events we run, and we run a lot of events here in Australia. We run a huge conference called the Sunrise, which is this awesome kind of bringing together of the community. And so we're working to make sure that what we're presenting is a balance for people looking at Blackbird. I think that's important because a lot of our deal flow just sort of is people coming to us through referrals, through networks. If women don't see you as somewhere that's receptive, then they won't come to you. We had a little bit of feedback early on that we looked a bit blokey, and so we've worked hard to try and change that. And that was a bit of like a stab in my heart at some point because we certainly weren't trying to do that at all. So we've done a lot on sourcing. We're starting to build communities. Kate and Maddie and a few others in our team are running these great dinners where we bring groups of women together, both founders and out of kind of operators inside tech companies who, we hope may become founders. And that we've had some really good success in that as well. So lots of things. There's no one silver bullet.
I'm curious, how has the pledge and, why did you say yes to us, actually, when Carol introduced you to us? What then encouraged you to take the pledge and really put a number to it?
It was very much something we were thinking strongly about, and we were starting to work on at the time. It sort of came together at exactly the right time, and it seemed, something we could do to kind of formalize what we wanted to do and actually make that statement. And I think that is an important thing to do. We thought it was a great movement to support and wanted to help support it out here to gather momentum. It felt like the right thing to do, and we enjoyed meeting, you and Carol and the team, and it's been a really good journey.
In the US, it's been a tough year, right? With the NTDI initiatives have been shut down in many different ways, unexpectedly, I guess, for some, within a moment's notice, just like USAID, right? How is the environment in Australia?
I don't think there has been nearly as much of a backlash. I think it's still something that people feel very favourably about. The idea of sort of quotas is being questioned much more, and we at Blackbird have never been about quotas. We've always wanted to make sure that our investing, the way we invest, the companies and founders we pick are totally merit. We fundamentally need to make great returns for our investors. That comes first. But what we want to do is set up the environment where what we want to do is make sure we don't miss the next Canva, right?
Yeah, biggest case you have for that.
Yeah, exactly. And so that's really how we're going about this. And we use the sort of objectives that we have at that investment committee level as ways to just make sure we've constantly got that in mind. And I think that's the right way to go about this sort of thing rather than trying to set hard quotas, at least for us.
Absolutely. And if you were building Blackbird today, what would you do differently and what would you do exactly the same?
A lot I'd do the same. We've built this this brand that I think is really important. I think VC brand is super important. So I would do all the community and brand building stuff that we've done very similarly. What would I do differently? Maybe we could have been more global earlier in that period in the early 2020s and put a bit more effort overseas. I think we're catching up now and sort of getting our brand out into particularly the US. We've run a whole lot of events over there with the Australian and New Zealand founders that are over in the US and in the UK. And, I will let you in on a little secret that Aussies and Kiwis are slowly taking over the world. Our fingers are everywhere. So I think, what we're focusing on now is to make sure we're really well embedded and in the mindset of those founders. I think probably could have done that a bit earlier.
Yeah. So maybe a global fund in the works, a next big global fund in the works.
Actually, no, we're actually not looking at doing a global fund, but what we want to do is make sure, because there are so many great Aussies and Kiwis overseas, we want to make sure they really know Blackbird.
Good. Okay. All right. So this is $1 billion questions. First thing that comes to mind. What truth about your journey would shock most people?
I didn't really know what my journey was going to be. It was all just serendipitous jump at opportunities.
And building your luck.
Yes.
What's one thing you wish you knew earlier about wealth or investing?
Well, I wish I'd had a lot more confidence earlier. And I think the ability to sort of press the button and actually make investments is so important. So, this business is all about not missing investments rather than making a few mistakes.
Which book changed your perspective and how?
I go back to a really old school one called The E-Myth, which I don't know if it's still in the circuit of founder books, but it's this great little book about starting a bakery and how you start out being really passionate about the craft, and then it turns into running a business, and how do you manage that?
And finally, what's your most unconventional advice to founders building?
I mean, one of the things in Australia is we do, which is interesting and probably a little different from the US, is we spend quite a lot of time telling founders to be more ambitious, push the boat out, spend more. Aussies and Kiwis tend to be much more frugal and, want to build things incrementally. And I think, how can you 100 times this is a common catchphrase. And I think, a lot of investors here in Australia are sort of trying to do the opposite. They're trying to sort of be frugal and do it step by step. And we're much more about, really pushing the ambition.
Yeah. And for pushing your ambition, Blackbird is today, one of the leading brands, right? Even in the US, I'll say your name has reached the shores. Congratulations, Rick Baker. And where can we find you?
Blackbird VC.
And hopefully we'll see you at Sunrise.
Come along to the Sunrise Conference in Sydney, in Australia. It's awesome.
What's the date of that?
In May.
May. Okay, so May next year, Sunrise in Sydney, and hopefully $1 Billion Moves will be covering the founders there too. Rick, thank you so much.
Thank you for having me.
And thanks so much for tuning in this week. You can subscribe wherever you get your podcasts and follow our socials on Sarah Chen Global to get the latest on the show. It would really help me out too if you enjoyed this to rate and review our show on Apple Podcasts and share your favorite episodes with a friend. I'm Sarah Chen-Spellings, and you've been listening to $1 Billion Moves.